In today's video, I'm going to take a look at the stock market. I think we're setting up for um, maybe a fairly nasty correction. So the first point I want to cover here is this intermediate trend line. I'm still assuming that this is a intermediate decline, although some of the normal parameters weren't met. So one could make a case that this was the last intermediate cycle low, and then we've just got a really, really stretched intermediate cycle that's on like week 36. I could make that case, but I think I'm just going to go with this being the last intermediate cycle low. And then we had an FOMC meeting here. I've noted many times in the past that the Fed props the market up ahead of these FOMC meetings, makes their decisions much easier. Same thing happened here in the FOMC meeting this past week. They wanted to float the balloon that they're going to think about raising rates maybe in 2 years. So they can't float that balloon if the stock market is down 5 to 10%. That's not an option. So if you want to let the market slowly come to grips with the possibility of a rate hike, you've got to do it with the market at all-time highs. So they propped this market up, and then they did let everyone know that they are going to start considering rate hikes. But again, 2 years from now, who knows what's going to be happening at that point. But anyway, once the FOMC meeting was over and the support for the market was taken away, they managed to do what they needed to do, and now the market is correcting, and price has broken this intermediate trend line. It's usually a pretty good indication that we're starting to move down into a larger intermediate degree correction. And then here's the problem. The correction probably started naturally right here with this little double top. If price had been allowed to move naturally, we would have been down probably, like I said, 5 to 7% at the FOMC meeting. That wasn't allowed to happen. So now we've got to make up for lost time. Now the market has to correct more violently to accomplish what it needs to do, as there's just not that many days left in the daily cycle. So I think by propping the market up ahead of the FOMC meeting, the Fed has guaranteed that we're going to have a much more volatile move down into the intermediate cycle low. So we're getting ready for another volatility event, basically. I've been warning for months and months that we were going to see these. We were going to have, at least one or two. This will be the second one, and I'll show you the chart of the Nasdaq here in a minute. But here's another indication that would suggest to me that this is going to turn into a larger degree intermediate correction rather than just a minor daily cycle low that turns back up fairly quickly. And that is that the 5-day RSI is starting to embed in the oversold condition. So during the advancing phase of an intermediate cycle, price tends to bounce pretty quickly once oversold conditions are hit. It doesn't tend to embed in the oversold condition if you're still in the advancing phase of the intermediate cycle. So this is another clue that we're probably starting an intermediate decline, and it's probably going to be pretty severe because the market wasn't allowed to continue down naturally ahead of that FOMC meeting. So a couple things to look for next week. We're on I believe this is day 26, or Monday is going to be day 26 of this daily cycle. Originally I was expecting a short daily cycle here and then one more daily cycle to follow, and that would give us our final intermediate cycle low. But the fact that we've got kind of a semi-fundamental change in the currencies, this has triggered a rally in the dollar. I think that rally in the dollar is going to pressure everything. It's pressuring gold. It's probably going to pressure energy at some point here soon, maybe next week, and it looks to me like it's pressuring the stock market. So I'm going to change my expectation and say that I think we're going to get that ICL right here during this daily cycle. It's already on day 26. They usually run 35 to 40, 45 days. So I'm going to suggest we probably got 2 weeks. And I think probably early next week, we're going to have a really scary couple of days down. Maybe we come down to test 4,000 and do it really quickly, and then we'll get a bounce, and everybody will think that the coast is clear, and they'll pile back in too quickly, and then we'll get a second leg down. And as I noted before, almost all of these ICLs unfold at least as an ABC move. So this was, you could see first leg down bounce, and then we had another couple of bounces during this one. So as I said, some of the parameters were met here, but some weren't. So there's some question in my mind of whether or not I want to even call this an intermediate cycle low. And if it's not, then we are way, way, way overdue for one. This being the last intermediate cycle low, and that would imply that this is going to be quite severe. So a couple things I'll look at here. First off, you can see with all of the efforts to keep the market propped up, they've just allowed price to get way too far above the 200-day moving average. So this is going to pull like a magnet to try and draw price back down towards this long-term mean. Either that or price is going to have to turn sideways for several months and allow this 200-day moving average to catch up to price. And if I switch this to the weekly chart, it's even more exaggerated and more extreme. All right, so here's the weekly chart, and you can see just exactly what all of the QE that's been pumped into the markets after the crash last year has done. We've just stretched price insanely far above this long-term moving average, and I'm pretty much convinced that this was the slingshot move that starts the bubble phase, which is the ending phase of a long-term bull market. So I don't think we're ready to crash down here and take this out yet. And when we do, we're going to go far below it before this finally ends. But I think the bubble is probably going to happen in tech, not the S&P. All right, so we can see this developing in the Nasdaq. 14,000, actually about 14.2 has been this resistance zone. Again, in several of my previous videos, I noted that it's getting pretty late in the intermediate cycle, and I did not think that we were going to be able to break out above this resistance zone and get a sustained move. We might get a marginal breakout, but I think institutions would sell into that marginal breakout, leaving retail holders holding the bag, and then we're going to go back down. And the fact that the RSI is getting oversold, and we've got some indications that an intermediate top is formed, is probably going to confirm this, and we're going to get another move back down in the Nasdaq, and maybe we come all the way back down to test this 200-day moving average here before the intermediate cycle low is done. But you can see again on the longer term chart, extremely stretched above the long-term mean. Price either needed to come back down to that and work that off, or it needs to go sideways, and it's done both. So we've been stuck underneath this 14,000 resistance for most of the year. Now, if I convert this to the weekly chart and zoom out a little further, you can see again just how extreme this has become, and I think there's a possibility that we're developing a midpoint consolidation, and that once we are ready to break out above this 14,000 resistance zone, I think there's a decent possibility that we can get a very similar magnitude move as what occurred from here to here. So that's, I'm going to roughly 8,000 points. So I call this a T1 pattern, This is the first leg up, and you get a midpoint consolidation, and then once the breakout from that consolidation occurs, you get a similar move of the magnitude of the first move. Usually comes up a little bit short, so let's call it maybe 7,000 points. So that would target something in the 20 to 21,000 range before the market tops. And as we know, the final phase of a bubble, it occurs pretty rapidly, usually in about 2 to 3 months. So I think we're going to get a pretty hard, pretty severe ICL. I think the Fed panics. They walk back their interest rate rhetoric or hiking rhetoric. That turns the dollar back down. That's the fundamental driver for the next leg up in commodities, another leg up in gold, and probably for the bubble phase in the stock market. And I think this next phase is when we get the real acceleration in price, where everybody finally starts to pile in as they view this as free money, and we get something that looks not as big a magnitude, obviously, because the stock market is much more liquid, but something that looks similar to what just happened in Bitcoin, and creates the same kind of bulletproof sentiment that we saw in Bitcoin that caused so many people to get caught at the top. They had just become conditioned to expect only higher prices, and all pullbacks were bought that they could not see the bubble forming. They could not make themselves take profits because they were envisioning price to 100,000 or 1,000,000 or whatever insane targets they had. And they had convinced themselves to just hold through every pullback until their target was met. And then when their target was not met and the bubble popped, then they were stuck, and they ended up having to hold all the way down. The same sentiment's going to develop in the stock market. We're not there yet, but if we get a move, if we get a sharp pullback and then recovers quickly and takes off to the upside, and we tack on another 8,000 points from here, that's going to develop that kind of sentiment, and everybody will become convinced that there's no risk in the stock market, and that will give us our final bubble run, and then that will lock everybody into the market so that everybody takes the full ride all the way back down, and everybody loses everything. Like 95% of people always lose money in bubbles. They get rich in paper on the way up, and then they give it all back on the way down. Human nature never changes, so 95% of people never make any money, any keepable money on a bubble. But I think we're probably getting ready to set up that final bubble stage in the stock market here.